Hello, everyone. So, as we've been doing this past few days, let's get a quick analysis of the market. At least from the way I see it, I try to keep things simple. I don't want to be spending too much time analyzing the market each morning. To me, it doesn't make sense. I trade by models and systems. I don't really care too much about doing strict analysis, like macro analysis and stuff like that. So the S&P 500 is slightly up pre-market. I'm looking at the weekly, which is usually good. We want to see the traditional market, risk assets, whatever you want to call it, positive on the day, since we are trading mostly crypto. Crypto today is also experiencing so far in the morning an update. We have Bitcoin leading with a 2% increase so far on the day. Let me just delete this. Change to BTC USD. So pretty good. Bitcoin has been stuck in this range since December, just going up and down. So not a lot of trends being generated here. So returns are kind of stale. As you can see, I'm only up 4.72% from last month. This is a new dashboard that I've built to get a better idea for the strategies that are running, the performance. I'm going to continue to improve this so that every day we can have a quick way, let's say, of analyzing not only the market but also my performance. As I've said in the past, I trade multiple. I trade mainly trends. So right now, this model, the blue line is my performance since 2023, and I've been trading just trend following strategy, my portfolio, and that's what I focus. So yeah, the crypto market is up today. Most of the altcoins are also up, green on the day. I'm still loading OM. I'm still loading Monero, XMR, DEX, Hyperliquid, and Bitcoin. These are my main holds. In terms of the scan, let's get into it. So we have S&P here. I don't like to trade much of these football club coins. I don't like it. I can take them out of the scan here, but generally I see that they are not very conducive of trend. We want to stick with the largest altcoins in the market because those are usually the ones that have the highest trend properties. At least from my analysis, that's what I want to do. Like I want to stick with the largest coins, the ones where just that have more liquidity and they have more, let's say, staying power, if that makes sense. When you start going down the scale of market cap in crypto and volume and dollar volume traded and everything like that into the lower liquidity coins, you start to see that your trends or momentum properties start to decline a lot. So I don't want to be trading those coins if I'm doing trend following mainly. And yes, so we have a bunch of coins here. L, I don't like. I want to see a larger trend. I don't like these coins that are going up and down all the time. Ondo, for example, this is a good one. I already have here my alert. So that when it starts to break out, I'll take a position. We have Tau, nothing. In general, you want to see these large trends, right? For example, you don't want to see stuff like this declining, never had the trends in the past. These things are not worth trading to me. You can see that clearly someone is always selling up here. Every time it spikes, it crashes, spikes, crash. Whatever is happening here, I don't want to be involved. And if we actually check CoinGecko, let me see the market cap of ASR. It could be that it is a large coin. No, yeah, ASR is a token for Rome, for the football club. I'll put it here. So as I was saying, this is a Rome fan token. It has like a 11 million market cap. You can see that these coins, if it has 11 million market cap and it's trading like $30 million a day, everyone can manipulate this, okay? When I say everyone, I say every decent, doesn't even have to be decent, just a an order can manipulate these prices, and these things don't tend to trend a lot. We want to focus on coins with at least like 100 million market cap, at least. So we have Move here. Move is a good one in terms of trend, if I'm not mistaken. It has a little history on Binance. On Bybit, let me see. Move. You can see that it has a 1 billion market cap, and as you can see, yeah, it only started in December 2024. The action is not great, but above 0.90 is what we want to see the breakout. It could potentially generate a new trend, so that's why I'm watching it. Did I set an alert? No, I didn't. Yes, I do. I have an alert there. LTC is also an interesting one that I'm looking at if it breaks out over here. LTC is Litecoin. We know that has trends in the past. It's a strong coin. It is one of the top market cap coins, right? So it has above 10 billion, if I'm not mistaken. Yeah, 8 billion. So yeah, once this breaks out, takes these levels over here, I want to be involved in it because it's strong. No, CTK, you have Kava, you have HBAR. HBAR, another one that is good. I've been trading this one. When it broke out over here and here, I don't think I traded it on the first breakout. I don't remember, but maybe I did. But right now I'm watching again those levels. SUI, I traded SUI from September 2024 after this broke out. Sorry for that plot. After it broke out here, I took a position and I rode this thing up to probably around 382 around 380s when it started to collapse and took my trail off. Now I'm looking again to re-enter it up here. ADA. I'm also looking at ADA, of course, Cardano. This is one of the strongest coins. You can see in the past it had major trends. If it breaks out again above this 1.20 breakout level, I want to be in it. SUI, already we talked about it. HBAR as well. XLM as well. Nice leg up. If it breaks out, I want to take a position there. My trading is all about if-thens, right? I have all the rules defined. All the rules are defined. I know that I want to trade on breakouts that are strong enough, like it has multiple weeks of consolidation. For example, here you have multiple weeks, you take a breakout, multiple weeks, you take another breakout. And yeah, that's basically what I want to be doing, just trading breakouts on the way up. I don't want to be trading breakouts down here or down here. I want to be trading when you have like these massive explosive moves, and then you get a new position to take in. And every time that the market is not conducive of breakouts, we want to be sitting cash, or having that cash allocated somewhere getting yield, right? As you can see, the market has collapsed a lot these past few weeks from early January, and my performance here on the left has remained rather stable. And that's because my exposures are not that large. Yeah, from December. So just OHM, we already know. So the same concept here. I traded OHM back in April, if I'm not mistaken, in June 2024. But I had to leave at a small loss. I remember leaving this one as a small loss because it retraced and took out my trail. But then I re-entered it back here and I rode it up here. Unfortunately, I don't think I caught this leg because I was already too exposed. I didn't have capital left, if I'm not mistaken. I can't remember. I'm updating here the daily exposure chart, and in the future I'll be able to show you the trades and we can make confirmations. We can confirm if I was on the trade or not. So tomorrow this should be done, this table. But I don't think I caught this leg here, unfortunately. I was already exposed to other stuff. Yeah, I was at 100% and I lost to 98% exactly. Yeah. Um, no, no, we checked the major ones. I also checked the, sorry, not 1 week, but 1 month changes. What are the ones that are really trending higher? Look, we have Bell. We already discussed Bell. I don't like it very much. Let me see the market cap of Bell. Bell Protocol. It's only 49 million. You see, every time you see a chart like this, very jumpy, very every major run gets sold into, major like sell. This was a 70% weekly bar. This is a lot. Okay, we don't want to be involved in this type of coins. We want to be involved in the ones that have legs to go up. For example, Kava. I like Kava even though it has been going down a lot. Let me see the market cap. Kava. This 500 million market cap. Yeah, right. So if it breaks out, I want to be involved in it. Some stable coin or whatever. DF. DF, I also want to be involved if it breaks above here. I think check how much market cap. I don't usually check market cap. No, I don't want to be involved there because it's less than 100 million market cap. I usually don't check market cap as I'm scanning. The scanning is meant to be fast. I just want to like sift through these coins, see if there's any potential. Usual. Let me check. Usually, I just want to be notified if it breaks out here. ACT, Vana, HBAR. I saw it. XRP important. I want to buy XRP at the breakout, of course. We already saw Pengu. XLM. Spell. I was in Spell. Spell was a sad one because I entered my position here at this breakout here. At 0.09 this ran almost 2x, right, to 0.20, over 2x, so over 100%, sorry, not it's 2x but 100%, and it came back down. I left around here, I think around 0.12 or something, so that one was sad. We have Ondo. I want to be involved in it. We already mentioned IOTA. I also want to know IOTA when it breaks out here. Then we already saw CLV. There's nothing going on here, but if it breaks out here, I want to know. Hermes. Oh, this is TradingView warning me that I already have 400 open alerts. But they active only all of them. Okay. I have their highest plan. Yeah. Before I could have any alerts I wanted. Delete all inactive. All. Now let me see if they allow. No, they just allow for 400. Good stuff. Check IOTA. So I don't need twice of them. So this is weird. Okay, I'm going to have to look into that later on. We have these, we have Peanut, we have XVG, we have Hive, we have STP, DEX. We are already in VET. In DEX, sorry, DEX. We have already here. Bell, Link. The thing is, most of these coins are already mapped out, right? I've been mapping them out over time. I already know most of them have alerts where I want to enter because I do this every day. And currently I only hold like 6 positions. So it means that I'm mostly not exposed to the market, and that means that I have alerts. I have a bunch of alerts that I've set over the months that are not triggered yet, and that's why I have so many alerts open right now. But with time, as I get allocated, and if the market trends higher, I'll get all the alerts, and then, yeah, basically these alerts get cleaned up, and the cycle repeats. KNT, AV is also a nice one. I really want to be involved. If it breaks out, this has been a very strong one over the past year. As you can see, strong trend. KNT, TRX. KNT, I think I had an alert. Yeah, exactly. I have an alert here for Tron. I think I also have an alert. Yeah, exactly. You see, these are all mapped out. I already know them by heart almost because I look at them every day. Every day I'm looking at this stuff. Morpho, DGB, Doge. People often ask me, how do I get such good entries on my positions? How did I get that entry, that entry? Because I do this every day. I'm here every day checking the market, scanning for new potential positions that I might be looking at. And over time, you just get the positions and you buy in when nobody's looking, right? That's why I trade systematic. I can't keep up with the market if I don't have rules every day to follow. Trading discretionarily is something that I was never able to do. Having too many decisions every day to make, it's just not viable, at least to me. Yeah, you get caught in making random decisions just because you either want action or you are afraid, and then you don't take decisions. And no, you need something that you can rely on, rules, and that's the name of the game, in my opinion. Some people can do without rules. Some people can do without rules, can trade just whatever they feel like on that day, whatever they see their discretion or intuition sees, and that's fine. If people make money, that's all that matters. And I know a lot of good traders that trade it that way. I'm not knocking on it, I'm just saying for most people it's not viable. Most people are not disciplined enough to take on positions every day and take that volatility. You know what it's like to go on here on the left, like on my chart, you can see from March 15 we've been in a drawdown. I lost money until from March until September bottom. Okay, you know what it's like to go through these drawdowns, and these are natural. This is not something that other traders didn't experience. Every trader trading trend following strategies experienced this at some point. Okay, and everybody trading trend in crypto, like myself, experienced the same drawdown that I did. Maybe not the same in magnitude, maybe not the same in length. In length, you can say, okay, by a day or two, whatever, but everybody had the same, because we are trading all the same thing, and every one of us has a drawdown. It's not that you are trading badly, even though you could, because I traded badly around this time, and I only realized after, but that's another conversation. But the market will give you what the market will give, okay? It's not people. I see a lot of people on the discretionary land saying, "Oh, I'm down this month. I traded badly." Well, my question is, did you really trade badly, or was it just the market that it wasn't in line with the way you trade? That's the question you should be asking. Not if you traded wrongly and you executed positions outside of your model. If you did mistakes, if you didn't, okay, that's great. Fix that. But comes to a point where you have to take what the market gives you, and either your model works long term or it doesn't. 1 month fluctuation, a 6 month fluctuation doesn't matter anything to most models, or it shouldn't, at least. People get too caught up in the short term. Yeah, I've made 100% in the last 1 year and a half. So who can say that in other markets? And But experiencing this volatility and trying to fix mistakes, trying to improve, that's not easy. It's not easy to be in the market. That's why you see so many back tests and just people talking about trading and no one actually doing it, because going through the volatility is where the skill is, in my opinion. Yes, you have to know what kind of edges you should be looking for. You need to know your edge. You need to have a statistical model to exploit that edge. You have to have infrastructure to exploit the edge. Or if you trade manually, you need to be disciplined to be doing every day your scans and finding new trades and stuff like that. But at the end of the day comes, how do you manage the volatility of your performance? All right. And yeah, that's why so many people can't take it, because they just can't take the volatility. They just can't understand that you can ever lose a year. You can lose money for an entire year and still be doing fine and still have done everything correctly. Okay, that's the nature of this game, and that's why I say it's a hard game. If you can do it well, if you can make money here, you probably can make money in any other business, and maybe easier money. This is a business for me, in my opinion, of capital appreciation. So when people come here with, let's say, $1,000 or $5,000, I'm like, okay, you have two options. You are not going to make any money trading reliable, or how can I say it, sensible models that are meant to grow an account, like trend following, momentum, mean reversion, arbitrage, whatever. Maybe arbitrage you can, but you need very specific and large edges. So you have two options. You either want to just build a track record to maybe get into the industry, maybe you can help others, whatever, with a track record. I'm not saying you need a track record. Most people don't trade. But and the other option is, or you need to take a lot of risk to grow that small portfolio, and you're probably going to blow it up. Odds are that you're going to blow that portfolio up. Yes, we all see stories of people turning a few $1,000s into hundreds of thousands and million, whatever. If let's assume that some of those stories are real, which they are, but the large majority aren't, and there's so much on the background that you are not seeing. Let's assume that some of the stories are true, because I know that some are true, and whatever, they either got lucky or they took an insane amount of risk during a really good period and really compounded their accounts. Those are usually the cases of what happened. Someone, for example, someone put $1,000 in a meme coin and got lucky, and yeah, made a bunch of cash there. Those people usually tend to lose the money a few in the following weeks and months, because they don't know how they did it, and they think now they are great traders and start doing stupid decisions after that. And the other group of traders are a group of traders that took an enormous amount of risk, but at the right time. And then I think there's an even smaller group that it's even smaller, that takes an insane amount of risk on every position, whatever, but they are extremely good at managing it and are doing scalping and other stuff like that, really short-term stuff. But that group of people, in my experience, is so small that it's not a good long-term bet for most people. So yeah, trading or investing is a game of capital appreciation, and you need capital to do it. There's no other way around. If you want to build capital, you're going to take an unusual amount of risk that could lead you to the blow up of your account or severe drawdowns. That's just a reality. In markets, there's how can I say it? There's no way around the dynamic that for more return you need more risk, and more risk leads to higher potential for ruin, right? To lose everything that you have. For example, even myself, my annualized volatility right now stands at 53%. This is a lot compared to other people, like in traditional finance. In traditional markets, having 30% annualized volatility is already a lot. It's already considered risky, and I'm running at 53. and I'm conscious of that risk. It's not because uh, I'm blind to it. No, I know that I'm running at a lot of risk. I run at risk of volatility, of hacking because I'm in crypto, of exchanges blowing up like FTX did. Um, there's tons of risk to what I do, but I accept those risks and I know that I have them. But I still take risk because I know the potential in this space is so much higher because it's an emerging market and still is an emerging market. And I'm willing to take those risks to grow capital. So maybe in the future will pay off. So far it has, but we'll continue to take that risk. And eventually, as the account scales, my plan is to scale the account back, scale it back to an acceptable annualized volatility that I can rest, or I can say I can be more comfortable with when I have large and large amounts of capital to manage, right? If I was managing $50 million for clients, I wouldn't run it at 50% volatility, right? That's the whole point. It's more risk, more return, usually as well, but more risk. And we have to be very careful on how we manage risk, in my opinion. Yeah, that's it for today. Thank you.